Hello and welcome to this video. In this video, I'll be discussing two templates which I'm going to show you. One is free and one is pro. These templates are all about depreciation and fixed asset management. So this is the free template which has input tab, output tab and validation. And this is the pro template which has a dashboard, beautiful dashboard like this as you can see. A detailed report, Power Query connection, input, validation and output. Before we jump to these two templates, I'm gonna give you a brief idea about three depreciation methods which are most common and used around the world. And these methods are IFRS and US GAAP compliant. So these methods are straight line, that is SLN, declining balance, or a DB method or diminishing balance method, and double declining method. So what is depreciation? Depreciation in finance and accounting is a systematic allocation of an asset's cost over useful life. As asset wears out or become obsolete, business expends a portion of the cost each year. That is called depreciation. And these are the most common types of asset. There could be other kind of asset as well. For calculating depreciation, there are three main elements you need to arrive at the correct depreciation in all these three methods. One is cost, salvage value and useful life. These are the three standard methods of depreciation and there are three accepted under IFRS and US GAAP. First is straight line method, which is equal expense each year and the simplest and most predictable method. So each year your depreciation remains the same and the formula for straight line method depreciation is cost minus salvage value divided by useful life. The second method is declining balance method or diminishing balance method. Under DB method, you have a higher expenses early on for the depreciation based on declining book value each year. The formula for DB method is book rate multiplied by the rate. And the third method is DDB method, double declining method. Double the straight line rate for the maximum front-loaded depreciation. The formula for DDB is book value multiplied by 2 divided by life. So if your life for the asset is 10 years, that means the depreciation becomes 10%. But in DDB it becomes 20%. This is the straight line method and this is a very simple example. The formula for straight line method is simple. Cost minus salvage value divided by useful life. So if you have an asset cost 50,000 and the salvage value 5,000 and you need to deduct the same from the cost, you get 45,000. You need to divide by useful life, which is 5. You get $9,000 a year as a depreciation. And this is the typical schedule for straight line method depreciation. Here depreciation remains the same, that is $9,000 a year, and book value reduces by the same amount until it reaches the salvage value, which is 5,000. Now DD and DDB method are accelerated method of depreciation. So early on the depreciation is really high under these two methods. So declining balance method has a formula. So you need to derive the rate first. And the formula for that is rate is equal to 1 minus salvage value divided by cost. And you have to put a power, that is useful life, that is 1 divided by the life. So if you know in Excel there is a DB function. So if you apply is equal to DB and you put this particular values, that is salvage value and cost and the useful life, it applies underneath the same formula and that gives you a rate. That rate you need to apply to the diminishing value or book value. Applies the rate to the book value, not cost. Higher depreciation in early years, never goes below salvage value, good for electronics and vehicles. So this kind of assets where the value for that asset is good in the earlier years, that's where you apply DB method. Double declining balance method has a formula of rate is equal to 2 divided by useful life. So if you go to Excel and apply DDB function, underneath this is the formula it applies. So it's a double the straight line method of depreciation, most aggressive and front-loaded depreciation method. Switches to SLN when beneficial. So here if the asset is going on depreciating and when the depreciation amount becomes less than SLN, it switches to SLN method. It is ideal for R&D and TAC equipment. As I explained, this kind of assets and TAC equipment kind of asset has its usefulness earlier in its life. That's where you apply double declining balance method. Here you can see the visual comparison of three methods. So the green one is SLN. As you can see, it stays the same, but DB and DDB has a higher depreciation in early of its useful life. As you can see, it starts very high. Compared to 9K here, it has double the depreciation. and then it goes down in the later part of the useful life of the asset. So here you can see the visual chart for each method, and here you can see interactive chart. So if you put the asset cost here and adjust the salvage value, you can see depreciation changing. So if you go to DB, so this is the DDB method. So if you go to DB, it's slightly lower than the DDB, but you can see how depreciation changes, and you can see straight line method depreciation remains straightforward, same amount each year, while the other two method depreciation is always higher compared to the straight line. Same way with DDB. I will link this particular interactive visual interactive slide in the video description, so you can play around and learn about these three methods interactively. Now we'll jump to the templates. So I have two templates here. One is the free template. As you can see on the screen, it only has SL method, that is straight line method, and maximum assets you can input is 10. You can set it up like this. So you can put the name of the company here and your fiscal year. So currently I have set up calendar year as the fiscal year, but you can change to any year. For example, if you put April as the start of the fiscal year, the end month would be March. If you put July, it becomes June here. And here you put the data, and these are the columns, total 21 columns. And these green columns are compulsory and mandatory. You must have fields in this particular columns. And here you can see it starts with asset ID, block of the asset name, purchase date, asset cost, salvage value, useful life, method. Since this template is only for SL, so we'll have only SL method, that is straight line. EB factor, it is irrelevant for the SL method, it is a straight line method. Tax rate, this is the tax rate for your company or your business according to the tax law of your country, and this is the discount rate. Now why we have put tax rate here? So if you know, depreciation is a tax deductible expenditure in any country or any tax law. Most of the tax law allows depreciation as a deductible expenditure. That means you can save tax on the depreciation, cash portion of your income tax on the depreciation. So this particular percentage, if you put, you will see in the output tab how much tax you have saved on the depreciation expense in your income tax P&L, that is income tax profit and loss. Discount rate is for the calculating how much present value would be for your saved depreciation. The saving of tax on depreciation is also called depreciation tax shield. So since this is a cash amount you are saving each year, if you want to calculate the present value of those depreciation tax shield, this is the rate you apply, and you get the present value of your tax saving and cash portion. These are the improvement options. So I have given 2 improvement. So per asset you can do 2 improvement here, and you can put the value. So in this example, this particular asset, that is SL002, has an improvement on 15 March 2022, and the improvement cost is 1.2 million, and this is the new extended useful life. So earlier life was 30, now it has extended by 5 years more. And here we have a new salvage value, as you can see. So here the salvage value becomes from 850 to 1 million, and your asset useful life has increased by 5. Earlier it was 30, now overall the asset useful life has become 35. Similarly, for this particular asset SL003, we have an impairment. So if you know, in IFRS and US GAAP, if assets recovery value has reduced for some reason, if it is a technologically linked asset, it has market value which is lower than its book value, you need to book for impairment. You need to do an impairment and assess the carrying value to the market condition. So for this particular example, we have a 2.5 million worth of asset cost which was bought on 1st June 2018 with salvage value of 250,000. But if you see here on 1st June 2023, the impairment amount, that is the carrying amount of this asset, has become 1.8 million. Carrying amount is nothing but written down value or a net book value of the asset. This you will see in the action in the output tab. Similarly, we have cases where asset has been disposed. So this fourth asset, that is SL004, it has been sold on 1st September 2024 for $2.8 million and we have some disposable expense of 45,000. Similarly, we have this 10 cases with some edge cases here to show you how this particular depreciation template, the VBA formula or VBA engine, calculates everything correctly. Now, once you set up your 10 asset here, You need to ensure that this data is valid. Once you entered your data correctly, you need to click validate input data, and once you click that, you will see if there are any data which are mistyped. For example, if you have an asset cost value in this particular column, if you put tax or a incorrect value, it will flag it. Similarly, if you have missed to enter a value intentionally or unintentionally, it will flag it and depreciation won't work. So all the data entered here will be validated correctly. And if there are serious errors, you need to correct it before you run the depreciation. So now if you click calculate depreciation, so you need to go to output to see the calculation. So we have for 10 assets around 1700 rows, as you can see here. And if you go and check, all the calculation are done correctly. So we have total 20 columns with depreciation, impairment loss as well. So if you go down and check, we have this impairment loss, right? So this particular asset SL003, if you go here, we had impairment loss or recoverable value of 1.8 million on 1st June. So let's go and track that. So in the month of June, on 1st June, the value of the asset, which was the book value, that is cost minus accumulated depreciation, before that particular month, that is in month of May, the value was 1,937,500, 1,937,500. But since we had impairment, we had to immediately book that loss. So that particular value has become 1.8 million. That is this particular value. That's why the difference between these two becomes your impairment loss. And from then on, you calculate a different depreciation. So until that moment, the monthly depreciation was 9,375. But after impairment, since carrying value or book value has now become 1.8 million, your depreciation per month has reduced to 8606 or 8607 if you round it off. Similarly, we have a disposal gain or loss calculations. So in this case, the asset was sold for 2.8 million and we got a disposal gain of 361,000, which is comparing with this particular value. So difference between this depreciation of that particular month, if we had it, if this was end of the month, we would have a depreciation of that month. But in this case, since we have sold the asset on 1st September, the difference between these two, since the book value is lower than the sale value, we got a huge gain of 361,400. So this way you can easily calculate your 10 assets depreciation with few clicks. So this is the free template which is available for download. You can find the link in the description. Now if you want to learn more and do more sophisticated depreciation calculation, you can go to this website depreciationlab.org. You click on the link, this website will open. This is a fully functional SaaS app for fixed asset and depreciation calculation. This particular website or SaaS app supports 7 methods of depreciation. You can read about it more here. And it also has a free plan. So if you go to pricing section, you can sign up and you can get a free 10 asset depreciation account. As you can see, if you want to upgrade to more professional or business tier, you can go here and subscribe accordingly. But the good news is I am giving away 14 days business trial for this particular depreciation SaaS app. So for that, you need to fill up a Google form. You can go to the link in the description, submit your email address, and I will activate your 14 days trial for business tier account, where you can calculate depreciation up to 4,000 assets. As you can see here, 4,150 assets actually. It also has a bulk import and also many auditor day reports, and it also supports MACRS US tax and WDV tax India method. Now if you don't want to subscribe to this depreciation lab, we also have a template which is a pro template which you can go here and download, and I will show you the pro template now. So this is the pro template. It has a beautiful dashboard design with the help of Power Query. It has a similar tab input, but here you can input up to 50 assets, and this particular template supports 3 methods: SL, DD and DDB. The setup is almost similar, but we have more room up to 50 assets. So similar rules are here. So once you input your data, as you can see here in all these 22 columns, and remember the green columns are compulsory you need to put. And once you put your data, to ensure your data is accurate, you need to click this button, validate input data. and it will show you complete validation. So as long as there are no errors, you are fine, but there would be warnings. So you need to check these warnings, what's going on here. And as I said, if there are warnings, you can still continue calculating the depreciation. So let's go back to input tab, and here once you are happy, you can click this button, calculate depreciation, and if you go to output, you see the depreciation calculation done for 50 assets with 3 methods. So it has generated 6,302 rows with accurate calculation for all scenarios under all these 3 methods, that is SL, DD and DDB method. Now once this is done, I have created a Power Query report. So this report is generated with Power Query. Since this is an Excel table, this particular table has been taken as an input inside the Power Query. So if you go to Query and Connections, this output table calculation has been imported as a table inside Power Query. Here we do the manipulation for our dashboard and reporting purpose. So this manipulation steps are followed. So as you can see here, the output table has been taken as a source, and these all manipulation steps are going on in Power Query. And from that, we are generating this report table, which is the report you see outside on the Power Query report tab. So for that, the input or the table is this output table. So this is done to create a pivot table friendly and report friendly output table. So if you close and load, you'll see this is the particular report, and this report helps you to create a lot of analysis. So if you go here, here is the pivot table showing complete depreciation schedule. So here I have kept slicers for the years. This is the method and this is the block. Now if you don't want to get into Power Query, it's fine. I have ensured that the Power Query M code is very robust. As long as you don't change any columns here or don't manipulate anything, the Power Query will work with your data itself. So when you input your 50 assets data and you follow the method, that is input, validation and calculation, and you refresh, you can go here data and refresh all 2-3 times, the whole report will work just fine. Now this is the detailed report as I've shown you, and here we have a dashboard. So again, you need to set up your fiscal year, which is really important for the Power Query to give you a fiscal year depreciation. So let's go to dashboard. Here you can see it starts with your fiscal year. This is an automatic formula. So currently we are in financial year or a calendar year 2026. So automatically the fiscal year selected is FY 2026. So if I go here and show you something, so if I change this to April, save the file and refresh 2-3 times, the Power Query will change the fiscal year in the dashboard. You can see it became 26-27. Why? Because when you select April or any other month other than January as a start of your fiscal year, actual fiscal year will fall into 2 years, right? So here it is April. So it starts with April 2026 and ends in March 2027. That's why it shows 26-27. And here is the complete dashboard. Let's start with this cards. So it's expense for this year, that is fiscal year. So total money you are asset. So what is this? So it is a very simple explanation. This is the current fiscal year's depreciation cost for all of your asset you have input here. This is the tax shield. That is nothing but the depreciation cost into this tax rate. So that shows your current fiscal year tax shield. This is the asset purchase. So if I click here, for example, in 2014-15 fiscal year, we had one asset purchase. In 15-16, 0. And then in 16-17, 2, and accordingly you can see the asset purchased. This is your monthly depreciation, average monthly depreciation. This is your impairment, total impairment, and this is gain or loss on all of your 50 assets across 3 methods. Now below, this is the chart shows monthly depreciation versus tax shield. So this is the monthly depreciation in green color, and blue color shows the tax shield. So if you click various fiscal years, this chart will change accordingly, these 2 charts. And all other visual will also change. On the right side, we have this donut chart, which shows depreciation cost for top 5 block of assets. So you can see here. Here are the slices, which are filters. So we have filter for fiscal year, block of assets, and the method. Down below, we have annual depreciation trend versus current fiscal year. So here is the current fiscal year, which is automated. So if you're in a different fiscal year, or if this sheet is used in the next year, that is in 2027, this particular bar will move here. Or according to your chosen fiscal year, you can set it up here the input tab. And this is the annual depreciation trend. This is the monthly depreciation trend. Now on the right side, this is a very interesting table. So it shows top 10 largest assets, book value and useful life remaining in months. So these are the top 10 assets with the maximum book value and how many months are remaining for their depreciation life. Below we have a asset roll forward and net book value decay analysis. So what is this? So this is nothing but a grouped value of your assets based on the net book value and percentage of that net book value to your total portfolio of assets. So here you can see remaining months. This is the range 0 to 12 months. We have 567 assets with book value of 673,000. And the portion of that particular net book value is 1.14% on your total portfolio of the assets. Similarly, if you go down, we have 122 assets which has the remaining months, that is life more than 312 months, with 952,000 as net book value, and which represents 14.87% of your total portfolio value. On the right, we have annual depreciation trend by methods for first 10 years and also for top 15 assets. So here you can see each fiscal year what annual depreciation is higher. For example, everywhere the SL method depreciation is highest, while DB is the second highest and DDB is the third one. So with this pro template, you can manage up to 50 assets across 3 methods. And here you can see up to 50 assets you can add here and do the calculation, accurate calculation. And if you want to learn more about depreciation and if you want to up your game with managing your assets, that is up to 1,000 assets for total 7 methods, you can go to this particular link which I showed you here, Depreciation Lab. And there are also tutorials for Depreciation Lab. If you can go here to tutorials, you can learn more about the Depreciation Lab SaaS app. And as I said, we have also 14-day business trial going on. The link for the same is in the description. There is a Google form you need to update, especially with your name and the email address, and I will activate your 14 days business trial. Apart from that, if you go to this free plan, you can manage up to 10 assets. It's standard method, SL, DB and DDB method. And if you want this template also, the link is in the description. You can have this template by clicking the link and make your decision about it. If you have any question about this template, if you have any query, let me know in the comment section below and I'll be happy to answer that, and I'll catch you up in the next video. Thank you so much for watching.